traders all around the world. This is FXPassion broadcasting you live on YouTube. Happy Monday. And this is trading course 101, Forex trading course. Remember the three pillars, everybody. We are in the beginner module. We are still learning how to build strategy or system, and in between intermediate and advanced module we are going to learn how to use risk management. And the big one, in order to be consistently profitable, we need to understand also how the psychology works. Hello Miguel, how are you? Great homeworks, Miguel, congratulations to you. Everybody remember that 90%, hello George, remember that 90% of traders lose money in the Forex market worldwide. And the webinars are not investment or trading advice. The webinars are for educational purposes only. Don't trade with money you cannot afford to lose, everybody. And for homeworks or questions, you have my Gmail contact, my Skype contact, or my Hello Eddington, or my LinkedIn contact. That being said, let's dive into the live charts. And today is an easy one, right? How to trade resistance. Hello Annie, how are you? And remember everybody, I have a 20 seconds delay. Okay, so how to trade resistance in a downtrend. Now, this is the easy one, right? Now, what we learned so far in the previous webinars, everybody, is that not always, right? Not always the market is going to just connect, right? Sometimes yes, but sometimes it won't, right? So, and today we are going to talk another thing, which is the high time frame and the lower time frame, higher time frame, lower time frame, and confirmation trading period and the trading period, right? So this is just an example. This is the past resistance in a downtrend, but we said that sometimes the market is going to do like this, right? And sometimes going to break in order to go down, right? So it's going to be something like this. And we said that sometimes the market, it won't even connect, right? It's going to go extension, retracement, extension, and sometimes it's going to go here and it's going to increase the speed and just fall down, right? Clone. Okay, so those are the three different scenarios that the market can react. Sometimes it's going to just connect beautifully, sometimes it's going to go through, or sometimes it's not going to connect, it's not going to even touch the resistance. Okay, now we have the daily time frame, which is this quadrant in here, and clone, and we have the 2-hour time frame or 1 hour time frame, right? So let's write this down. Some of you are sending me daily emails and are questioning this, which is great. This means that you are studying. This is the 1 hour, 2 hours, 2 hour chart. Okay, this is the answer, everybody. So we're going to check, if you don't have any other currency pairs of interest, we're going to check AUDUSD. Is just an example, but if the daily down structure, right, or if the daily downtrend is something like this, okay, and the 1 hour or the 2 hours time frame is something like this, And bear in mind that we have three different behaviors how the market can connect. Okay, this is the daily. Okay, and this is the example from the daily. It happens on all time frame, everybody. Okay, and it happens on all currency pairs. Okay, happy Happy Monday. Okay, great. Question for you: should you enter or shouldn't you enter selling the 1 hour or the 2 hour or the 4 hour or the lower time frame? What do you think, everybody? It happens all the time. 1 hour, 2 hour, 4 hour time frame could be the trading time frame. The daily could be the confirmation time frame. You could have 15-minute chart trading time frame and 1 hour, 2 hour chart as your confirmation time frame. Right? So what do you think? And I'm going to help you a little bit. I'm going to help you. Just let me see. I'm going to help you a little bit. Okay, so this is going to be like this. Question for you: should you enter short or what? You can say yes, you can say. Which part of the daily is the 1 hour chart? The last small down line. Great question. This is it. There you go. The daily shows that the market may go further up, so stay out before shorting. Great answer, George. Miguel, what do you think? Eddington, what do you think? Annie, what do you think? There is no right or wrong, everybody. What is your opinion? Would you enter this trade? You have everything, right? You have the Fibonacci's and the Ichimoku and the dual cross, moving average, crossing, whatever. Frederick, wow, yes, enter. Right, why not, right? Why not? Okay, Annie, what do you think? Miguel, Eddington, George says stay out. Great answer. Frederick said yes, enter. Great answer. You could short. Miguel, short. Okay, we have two shorts, one out, staying out. And there is no right or wrong, everybody. But some of you send me these questions on the email. Oh, Passion, what to do in this example, right? I shorted the market, I lost, should I stay out? Right? So what is right, what is, well, not, there is no right or wrong, okay? But what can any, I don't know, short seems the best, okay? 3 short, 1 stay out. Okay? Now, there is no right or wrong, everybody. All of you that want to go short are right. And all of you, they want to stay out, are also right. Now, what can I tell you is that we don't, yes, go short on lower time frame. I hope I pronounce your name correctly, Sujit. Okay, if I don't, please tell me. There is no right or wrong, everybody. Okay, so, but remember, you as a beginner trader, how you should think. Well, we know all of this, right? We understand, we understood how the market works, we know about structure and everything, so there is no right or wrong in this. The market can go up, the market can go down. We don't have a crystal ball. Yes, we don't. What we can improve, everybody, is you have 23 different currency pairs. Okay? And talking about probability, and we explained to you in the previous webinars. Okay, so let's clarify one thing. Question number 1: should we go short or should we stay out? Suji, thank you. There is no right or wrong, okay? But what we know so far is that if you are going to find another currency pair where the daily chart is going to touch, is going to be exactly the same example, everybody, okay, the same example, but the market is going to touch past resistance, okay, this trade is going to have a greater chance of success. Okay, why is that? Because on every time frame the market can react, we don't know, right? Sometimes the market on the daily chart, on the confirmation time frame, sometimes the market is going to connect beautifully the highs with the lows. This could be structure or trend. Sometimes the market is going to break through the highs and the lows, and sometimes it won't, right? But so this is why there is not right or wrong. We can lose or we can win, the same. We don't have the crystal ball, as Frederick is saying. But if you have a currency pair on the confirmation time frame, which in this case is the daily, and you have the other currency pair that it's like this, which one you should enter first, everybody? And again, there is no right or wrong. You can say, oh, I can enter both, right? Or, in other words, which one is going to have a greater chance of success? Now, this is a different question from the one before, right? So you have two different currency pairs. One could be NZD CAD, the one is Euro JPY, and one currency pair, and the daily in 1 hour is just example. It could be the 1 hour, 2 hour, the 15-minute chart. Which one, and we have this data, statistically speaking, in a series of 100 trades, which one is going to give you the greater chance of success? So you are going to have more profitable trades than the other. And Frederick saying, we take the trade with the highest probability. Yes, sir, but which one is this? Which one is this? And one more, everybody. One more. I should have closed the one toward the last example, left side. Okay. Now, so yes, statistically speaking, this would be the better choice in a series of 100 trades. Those entries are going to be more profitable than those entries. Yes, sir. Okay. Now, I have a tricky one. What about if the market enters inside? Okay, so the other one is going to be like this. Okay, so the market in the 1 hour chart enter the market here, and even better, tricky question this time, everybody, even better, is going to do something like this. So you have, everybody, as a beginner trader, you need to be aware that there are different combinations of this behavior on your confirmation time frame. This behavior, this behavior, this behavior, and the same three behaviors on your trading time frame. What about now? You have one currency pair that didn't connect, didn't touch, didn't connect, but you have the other that went through, right? It entered the past resistance level. And this is the 1 hour, 2 hour chart on the one currency pair, and this is on the second currency pair. Which one is going to have a greater probability of success? What do you think? Breaking the resistance line is the same as touching the line. Great answer, George. There is no right or wrong, everybody. But George has a fair point, so yes. There is no right or wrong. You can say, oh, I'm going to stay out of both. No problem. You can say, oh, I would enter both. No problem. You can say, I would enter the upper one, not the lower one. I would enter the lower example. What do you think, everybody? There is no right or wrong. The first one, okay. Why not the second? The first one, okay. Victor and Annie, you are together. Why not the second one? George has a fair point. You too. Why not the second? But I am still waiting for the opportunity. No problem, but between the two, why not the second one first? There is no right or wrong, okay? But we are trying to learn how to think, because you are going to see this happening, everybody. It happens every day on all time frames, right? So before risking your risk capital, you should be clear on what is high probability with less technical risk and what is low probability with high technical risk. Which one? Okay, I'm going to give you a little bit of help, okay? What about now? Why not the second one? Resistance broken, and also look my is change trend. The first is higher risk, it may go up, and higher reward. If it goes down faster maybe, but better conservative. Frederick first. Now it's easy, right? Because why? You have the same probability in here, right? It's an area, sometimes it goes, sometimes not. But now on the 1 hour, 2 hour chart, the market made a structure or trend higher high, right? So between the two, and of course we need to monitor this. We learned about the 75% change in the trend. From the downtrend is changing to the uptrend, 75%. So this is the obvious choice, okay? One more and then we are going to check the live market. What if in the second example the market on the daily connected like in here, but on the 1 hour, 2 hour chart, and you are going to see this, everybody, it made a higher high. Which one? This is a little bit more advanced, right? An advanced question. You have this scenario and you have this scenario. Which one do you think has the greater chance, higher probability, statistically speaking, right? Which one? I'm going to wait because I have a 20 seconds delay on the chat. I know that your answer, Frederick, is from the previous question and answer. What about now? You have one currency pair that the market is kind of reversing, but it didn't connect. On the second example, on the lower example, you have a currency pair that it connected high with the low perfectly, and statistically speaking, on the daily time frame, on the confirmation time frame, we know that those are higher, have a better chance, a higher probability of success. But our trading time frame is the 1 hour, 2 hour chart, and on the second example, the 1 hour, 2 hour chart gave us, it broke or structure or short-term trend, still 75%, but it did a higher high. Which one do you think is going to have a greater chance of success? The second may go up to the next resistance level. It didn't break, George. The daily didn't break. The daily just connected. Okay? It didn't break, just connected. The first, Miguel, the upper one. You think upper one? Is anybody in here who thinks that the lower, the second example, is going to have a greater probability of success? What do you think? Annie, Miguel, Frederick, George, Eddington, Victor, Sujith, what do you think? Which one? You have a currency pair showing you this, upper or the first one, and the second one, the lower, is showing you this. Which one between those two is going to give you a greater chance of success? The upper one. I mean the one, go to the next resistance level. It's a simple answer, everybody, or the first one, or the upper one, or the second one, the lower one. And we have data about this. Okay. So Miguel says, and there is no right or wrong, okay? You can say, oh, I'm going to stay out from both, or you can say, oh, I would enter both, no problem. Miguel says the upper one. Okay. What is one of the most important concepts that we have learned from the beginning? Who knows? And then we are going to check the live market. Who knows, when you are dealing with this, who knows what is one of the most important concepts to learn and to bear in mind? The higher time frame controls, yes Miguel, congratulations, the higher time frame controls the smaller time frame. Victor says, well, I'm confused with the resistance on the second graphic. It touched. It didn't break, it just connected. But on the 2 hour chart, it made a higher high. Second graphic, the upper structure, everybody. Between those two, the second one has the greater chance of success, statistically speaking, and past statistics are no guarantee for future performance. Okay, the second chance. Passion, but the market did a hard high. Yes sir, yes ma'am. But the higher time frame controls the smaller time frame. And the 1 hour and the 2 hour chart, when you are comparing the confirmation time frame, those two are the least important charts. It's not that it's not important, but in comparing the confirmation time frame, the 1 hour chart, the 2 hour chart, it simply doesn't matter. Okay, because between those two, the lower, the second one wins. Okay? Oh, but there is no but, everybody. The higher time frame controls the smaller time frame. So you need to why 90% of traders fail, right? You need to learn how to think. So when this happens, you should first, number one, clarify the confirmation time frame. Okay? And when you have decided that the lower is going to give you the higher, the greater chance of probability, then you can discard the upper. Okay? So what we are going to do, we are going to choose the lower, we are going to choose this one, but maybe we are not going to enter right now, right? So choosing what to trade, everybody, it's not the same entering in a trade. Okay? But if you have these two, go first with this one. Okay? And then check, okay, I'm not going to enter right now because the market made a higher high, but we know that the higher time frame, and this is a rule, non-negotiable, 100% present, the higher time frame is going to control the smaller time frame. Okay? And I know some of you have experience, and you are going to enter, right? In this example, you are going to enter in this example, and the market is going to stop you out, and you are going to think, oh man, I just lost, the 1 hour stopped me out. Who in here thinks that way, everybody? Be honest, who in here is thinking this way? Be honest. I'm going to tell you, I was thinking this way. I was thinking, oh god damn it, you know, I shouldn't enter because the market was making higher high, and I knew that on the higher time frame and blah blah blah, you know. Who in here is thinking this way? I was thinking this way. So the answer is no. The market didn't went up because the 1 hour, 2 hour chart made a higher high. Why not? Because the higher time frame controls the smaller time frame. This comparison, and we have numbers, right? Even though past, what's the saying? Past statistics are not guarantee for the future, you know. You did the right choice in choosing between those two. Oh, passion, but I lost. So what? So what? You lost. So what? Right? We talk sometimes, we are joking. If you were my trader and you entered this one and you lost, I said, okay, no problem, there is another opportunity. Or maybe you entered prematurely, we don't know. But if you would choose between those two and you would trade this one and lose, then I would say, well, you should choose this one, right? No, but this one went up. It doesn't matter. Higher time frame controls the smaller time frame, and in a series of 100 trades, even though sometimes we are going to lose, right? In a series of 100 trades, this example wins all the time long. Okay, everybody, any questions so far? Of course, you can accept what we are telling you, you can reject, no problem. Any questions? Okay, no questions. So let's go on. Let's open AUDUSD. AUDUSD. And let's see how to trade resistance. We're going to trade AUDUSD, okay? And we are going to do a trading exercise. Let's open AUDUSD daily chart, everybody. Okay, and let me see. Okay, starting from here. AUDUSD, okay? AUDUSD. Let's compress. I'm going to go on the weekly first. because I cannot clearly see what is happening. So trend line, let's see. Higher highs, higher lows, right? Trend line like this, something like this, and we have transparency, right? So we can do something like this. Okay, uptrend line. Now we are going to starting from here. This is going to be our starting point. Okay, and we are going to go on the daily chart. There you go. Okay, daily chart, and we don't have the crystal ball, right? Daily chart, and this is our, we are as, okay, daily chart. So I'm not going to trade until here, right? I have the long-term uptrend line break. It's just an example. It happens on all time frames, right? What did we learn so far? We learned structure, we learned the market wave, right? So I'm going to do what? Extension, retracement, extension so far. Let me see. Okay, extension, retracement, extension. Okay, now this is the daily chart, right? And come on, let's transparency, something like this. And we don't have the crystal ball, right? But until here the market, we didn't trade until here. We didn't trade until here, so we are going to short the market, right? Why we are going to short the market? Well, from the weekly and monthly, from the monthly chart we learned what is the long-term bias, we learned how the currency, the forex market works, right? This is resistance, this is support, right? So even though we didn't see the future when the market hit resistance, we would start to reverse our positions and trying to short the market, right? Lower band, upper band. Okay, and if this is your first time, everybody, and if you don't understand, you have a playlist on the Downtrend YouTube page where is the Forex course 101. If you don't understand what is happening, go there and start watching all the videos. Okay, now this is the daily chart. What can we see? Well, we can draw some resistance, right? So I'm going to color code this in what? Yellow. Okay, now resistance, and as George said, resistance are levels, right? Resistance, resistance, resistance. The hourly is missing data. I'm on the daily, Victor. I'm on the daily right now. Or maybe this is the comment about the question before. However, I'm on the daily, AUDUSD daily chart. Okay, and those are all resistance levels. Okay, now we are here. And of course we don't have the crystal ball, right? And let's dive, we're going to dive into the chart. What we're going to do, we have structure, we have resistance, and we know that the market is in a retracement, right? Just to remind you, everybody, how are you going to spot that the extension is over and the retracement starts? You are going to see a change in the short-term trend. Okay, you are going to see the short-term trend is going to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then in some point in time is going to reverse and start making higher highs, higher lows, higher highs, higher lows. So, and we learned about what is 50%, 75%, what is 100% confirmed trend. So if this is your first time and you don't know this, go back on the playlist and study, watch these webinars over and over and over until you get it. And if you don't understand, send me an email. Okay? Oh, Passion, I watched your webinars 100 times. I still don't understand. Send me an email, connect to me with Skype, on Skype. No problem. Okay, so we are here, right? So we have this. The short-term trend is up. Short-term trend is up. Right? Now, you can draw a even more aggressive counter trend line if you want. And let's see what is happening. Market is moving. I'm going to zoom in. Zoom in, right? Zoom in. This is it, right? And let me see. See, the market didn't just touched, right? It went through, and we learned that when the market breaks one level of resistance, past resistance, that generally loves to gravitate to the other one. So let's see what the market is doing. Going, and we are here. So the aggressive counter trendline break. Let's zoom in the chart, right? One more, moving up, moving sideways. Okay, so we are here right now, and I'm going to color code this in black. There you go. Who in here would enter short, everybody? We have the market reacted to the first level of resistance, and we have two trend lines. Two counter trend lines, and we have the first counter trend line, aggressive counter trend line break. Who in here would enter, everybody? Who in here? And remember, there is no right or wrong, okay? You have more aggressive traders, you have less aggressive traders, right? You have traders saying, oh, this is enough for me, I'm going to enter. You have traders that are going to say, oh, this is not enough for me because the market on the smaller scale is making higher highs, higher lows. So this is not enough for me. There is no right or wrong, everybody. As George said, and Miguel and Eddington, if you enter here, you are going to have a higher degree of risk. But if you are going to enter later, and if the market is going to go down, you are going to enter in the better place right now, right? So, who in here would enter, everybody? You can say me not, you can say yes me, you can say I don't know, I'm going to wait. And remember, I have a 20 seconds delay. Yes, I'm going to, what would I do? I'm going to say later. First, I want to hear from you, everybody. Counter trendline break, right? Short term, markets making higher highs, higher lows. Wait for structure to be broken before you go short. Frederick, nope. Okay. Let's wait, let's wait, let's wait. Okay. What about now, everybody? One more. Let me see, one more. Let me see, right? What is the market doing? Whoops, higher high. Congratulations, Frederick and Miguel and Annie. And George, congratulations to all of you who said no. Not this time, let's wait. So this aggressive counter trend line just moved, right? From here to here. Let's see, the market is moving. We're going to do the first level of, no, we're going to leave it, no problem. So the market is moving up, right? Let's wait, moving up, and now we are here. We are here right now. Bam! Market broke the counter trend line, and the trend on the smaller scale is still like this, right? The violet one, making higher highs, higher lows. Okay. Looks like the market start reversing on the second area of past resistance. So all of you, they said that you are going to wait. Well, I believe you are going to wait for this, right? So we are going to wait for the market to do a lower low, right? Then this one. So let's see, let's wait, the market is falling, right? So this is the first counter trend line. The first counter trend line is here, the quadrant, and the market is moving, right? So let's wait, and we have a second counter trend line break. And I'm going to color code this in red. Red, there you go. First counter trend line, let's use a triangle, going to be better. First counter trend line, triangle, transparency color, yellow and yellow. And we have a second counter trend line in here. Okay, anybody here would enter this? Let's wait for one more. There you go. The market didn't break the short-term uptrend low, but we have the first counter trend line break and we have the second counter trend line break. Everybody, who would enter in here? Would anybody enter in here on the second counter trend line? Remember, we don't have this yet. There is no right or wrong, everybody. If you're an aggressive trader, you could be entering here. If you want to be more secure, you are going to wait for that the market breaks this short-term uptrend low, right? If you are in between, you would enter in the second counter trend line, right? Buy now. Frederick, are you sure? Buy now. Enter short, George. Yes, enter short. Okay. Everybody, Daniel Espinosa, short. Yes, sir. Great. We had two webinars that are a little bit difficult to understand, everybody. Remember, we taught you how to trade resistance in an uptrend and how to trade support in a downtrend. Okay? So together with this second counter trendline break, look at this low here, everybody. And this low here gives you another indication. Let's delete. Right? If the short-term trend was to continue, oh man, I need both sides. So There you go. If the short-term trend, the violet, making higher highs, higher lows, was to continue, then this low touched past support. I hope you can see this, everybody. Touched past support, and if the uptrend was to continue, the market should went up and make a higher high, right? Eddington, I believe Frederick was thinking short, not long. Frederick, not long, short, right? Extensions, retracements, structure, short-term trends. Okay, so number one, it broke the first aggressive counter trend line. Number two, it broke our second counter trend line. Number three, the market hit past support in a downtrend and it didn't went up. It broke the counter trend line and it's falling down. Okay, no guarantees though, there are no 100% trades. Okay, this is another reason why you can go short in here. And okay, but there is no right or wrong. And for the one, if you say no, I want to have the confirmation of the market to break my past uptrend low, no problem. So you can be aggressive here, you can be aggressive here, you want to be more conservative, you can wait, right? To go here. Okay, so let's see what is going to happen. Market is falling, right? Great, falling. Okay, again, another counter trendline break, right? Let's see, let's wait for the market. Now, who would enter on the third opportunity? We had opportunity number one, which is high risk. We had opportunity number two, which is less risk. And we have opportunity number three, which is even less risk, right? Because the market broke past trend, short-term trend low, right? At the end of week 45, there is a 100% downtrend. Thank you, George. Yes, sir. Yes, sir. And as George is saying, you have a 100% downtrend. Okay? And this is the less risky as it gets, technically speaking, until now with this knowledge that you have. Okay? You don't know nothing about the Forex market, you know just trend lines, structure, trends. And now we are learning support and resistance and pivot points. Short, short, yes, okay. And together we can see that this reacted, right, to past resistance. Okay. So let's see, the market is falling. Right, falling, falling. Falling, right, another here, another counter trend line here, another counter trend line here, right? So it's always the same, everybody, right? The problem is, where is the problem? Well, most of the time beginner traders lose money where and when they are entering the market prematurely. Okay, so as you can see, this trading, everybody, is not that difficult in the end, but of course you need to know how to properly spot and properly see trend lines and structure and short-term trends, right? So let's see what is going to happen. Market moving down and moving down, right? And we are We are going to draw a downtrend line. Downtrend line like this, right? Like this. Okay, so we are here right now. Who in here would go out of the shorts, pocket the profits? Who in here would go out? Right? This is another thing to learn, right? Higher highs, higher lows, higher highs, higher lows. Right? Who in here would go out? Oh, the market just changed the short-term trend. Remember, extension, retracement, extension. If you are here, and if you are strong enough, this is why I always finish saying stay strong. If you are strong enough, you know that this could not possibly be the end of the extension. Okay, yes, go out. Okay, yes, go out, no problem, but remember, extension, it's not over. Okay, and again, there is no right or wrong, right? If you want to be more secure, secure your profits, you can go out. If not, you can stay in the trade. Okay, you need to measure, everybody, extensions, retracements, extensions. Yes, pocket the profits. Okay, maybe not yet extension, but can re-enter later when we see how much. Yes, George, nice strategy, I agree with you. Okay, so let's see, bam, another counter trendline break, right? So, and let's see how far this is going to go. We are almost out of time, everybody, so let's see. And what? We are here then, right? AUDUSD daily chart. So this was the extension, right? Let's see. Let's compress the chart. And yes, so the yellow line. The yellow line, right? Retracement, extension, retracement. This is the yellow line. There you go. Okay, everybody, this is all for today. See you back tomorrow. Until tomorrow, no homeworks, everybody, no homeworks, but stay strong in the markets, obey the rules, study the charts, and watch these webinars over and over and over again. Okay? Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.